In this video, I'll be explaining the exact process in generating passive income through dividend investing. This is a great strategy for boosting your monthly income, creating money without having to work for it, and building a very, very profitable stock portfolio. Investing in dividend stocks is one of the easiest, most straightforward and reliable ways to generate passive income. Using some simple investing strategies, you can easily identify profitable, fast-growing dividend stocks to add to your portfolio, which can theoretically generate you an infinite supply of money. So right now, I'll be giving you all the information that you need and the exact steps in building a profitable dividend yielding stock portfolio, all the way from how much you need to invest, how to actually use a brokerage website to buy dividend stocks, and finally some recommendations of my personal favorite dividend stocks that you can add to your portfolio. There's some very specific steps that you're going to need to take in order to achieve this goal, and I'll be walking you through that. Now, it's not going to be a very quick overnight becoming a millionaire sort of thing, but it is very possible and it is entirely doable. How much money you make is dictated by the amount that you invest and the quality of the dividend stocks that you select to add into your portfolio. And this is quite a lengthy video, so I'll leave timestamps down below in the description box so you can skip to certain parts in the video. So just before we begin, I'll discuss what a dividend is. And a dividend is essentially a payback to a company's investors out of the company's profits. It's essentially recognizing the shareholder as part owner in that business, and when the business is doing well, it will share its profits with its investors. Dividends are normally paid back on a quarterly or annual basis. Typically, they're expressed as a percentage. The way you generate passive income with this dividend investing strategy is by buying into a dividend yielding stock, and then on that quarterly or annual basis, you'll get paid back a percentage in relation to how much you've put in. So if you invest $1,000 and you get a 3% dividend annually, you will get $30 every year. Now, that doesn't sound like a lot, but that's where the amount that you invest into it comes in. How quickly you reach this goal of ultimately getting, say, a dividend yield of $1,000 on a monthly basis is entirely dependent on how much you have invested. You typically get a dividend return of roughly between 4 and 6%. So that would mean that you'd have to have invested between $200,000 and $300,000, because then you would get $12,000 a year, so $1,000 a month. Now, before you click off this video and say that's impossible, there's no way you can achieve that. There's a very, very real strategy that I'm going to share with you on how exactly to get to this stage of getting $1,000 of monthly dividends. Now, it's not easy, it's not very quick, it's not going to happen overnight, but you can definitely do it. So the first thing that you need to do is set a time frame of when you want to achieve this goal. Is it 10 years, 20 years, 30 years down the track? How quickly do you want to get there? Because for the majority of people, they don't necessarily need to have this dividend income right now. It's something that you can build over time. You're not desperately scrambling for money, and that's why you're doing this passive investing strategy. So I'll throw up some numbers to show you how long this would take from that 10 to 30 year time range between that 4 and 6% dividend return. So with all of these, you'll be starting with an initial investment of $5,000, and then I'll be showing you the monthly contribution that you'd have to make in order to reach that $1,000 of monthly dividend income. So to get there, in 10 years, you would have to contribute monthly $2,041 at 4% and $1,210 at 6%. Then in 20 years time, you'd have to invest $808 and then $417 at a 6% return. And then lastly, at 30 years, obviously you have to invest the least because it's the furthest away. You would have to put in $425 at 4%, and then at 6% you'd have to put in $183. You can see here that the longer you take to achieve this goal, the less amount of money that you have to personally contribute. The longer it takes, the more compound interest you get, and the more it's your investment working for you to get to that $1,000 a month passive income goal. If you're looking at it over the course of 10 years at a 4% return, the difference between how much you put in and how much your investment made you is only roughly $50,000. So then if you look at that goal over the course of 30 years at 4%, and that's really the principle of this passive investing approach, that it's not a quick overnight result, but it's more something that you build over a period of time and that will work for you because you were consistent and added to your portfolio over years and years. Eventually it looks after you and will give you a substantial return that's very consistent and reliable and is really not going anywhere, something that you know will give you money month after month and always be there for you. The thing that makes this investing strategy so powerful and so popular is the fact that it's theoretically an infinite supply of money, because you'll get money not only from the dividend that you receive from the company, but also from the share price rising in value. And you never have to add any of your own income to the investment for it to grow, because you receive that dividend on a quarterly or an annual basis. You just reinvest that into your portfolio, and then year after year your money will grow by itself, and you never have to touch it. You just have to be consistent and reinvest that money instead of taking the dividend out and doing something else with it. And this will give you a very low maintenance, profitable and consistent stock portfolio that will grow by itself without you ever having to do anything. When you're selecting your dividend stocks, you need to be very aware of the dividend trap. And this is when a company will keep paying a dividend consistently, and that dividend might be rising in value, but the company shouldn't really be doing that. It's at the expense of the stock price. The dividend 5 years ago might have been 2% and now it's sitting at 5%. But just because the dividend is rising doesn't mean that it's a good investment, because the stock price might be plummeting throughout this time, and really the business should be using that money they're paying out to shareholders from the dividend should be reinvested into the company to help it out financially and stop the stock price from falling and stop the business from losing money. So you need to invest in companies that are very cash flow positive, ideally well-recognized blue chip businesses like Coca-Cola, Pepsi or McDonald's, and there's many others as well, but these are some of the most popular ones that you can find. If you want to research a business and see that its cash flows and revenues are nice and consistent, head over to QuickFS. I'll leave a link down below in the description, and you can search the ticker symbol for the company and then click on this tab, and you can see how the cash flow for that business has been over a period of years, and you can see if it's in any financial strife and whether it might negatively impact your investment plans. If you wanted to invest in these businesses, you just need to set up a brokerage platform and then search the ticker symbol for that company, and then you can start investing in these shares. So it's a very straightforward process to get into these businesses. They are listed on virtually every brokerage website, so you don't have to have any special one to get access to them. If you want to see a complete step-by-step guide on how to actually buy stocks using a brokerage website, if you're outside of America, the video on screen is relevant for you. It's a complete tutorial on how to use the brokerage platform Stake, which is a great place to buy into dividend yielding stocks. Click that video to see exactly how to use Stake, all the little ins and outs of that platform, and how you can use it to start building a profitable dividend yielding portfolio.